company stock and another 3 shares for his sister. Well, today Warren Buffett is the most successful investor of the 20th century and also the wealthiest man in the world. So what is investing and trading? I'm sure many of you have 401k plans, many of you are saving for retirement, and yet there are others who don't know what this whole investing and trading thing means and what are the most common investing and trading strategies. I've been working as a licensed broker on Wall Street for 2 years. Also, I'm currently employed at E-Trade Financial, where I deal with clients on a daily basis and I explain the investing and trading common strategies. So today we'll talk about what a long trade is. We'll also go over what a short trade is and how to avoid the most common Ponzi investing schemes. So what is a long trade? Imagine living 200 years ago and trading under a tree. I'm not kidding, this buttonwood tree served as a meeting place where investors and traders used to get together at this spot and buy and sell company shares right under this tree. Well, thanks to technology, Wall Street is now an high-speed interconnected web network where you can buy most everything, pretty much everything, on the website and electronically. So let's say you've been doing some research and you think that since Christmas is coming up, retail companies that sell Christmas stuff might do well. So what do? This is what you can do. You can buy retail companies like Macy's, maybe Walmart or Lowe's, and get into a long trade. How does a long trade work? It's very easy to understand. It's when you buy something low and you sell it higher. For example, let's say you buy a stock at $30 per share and you sell it later at $45 per share. So you make a profit of $15 per share. You're considered to be bullish on a stock. Wall Street will call you bullish if you expect the company to grow in value. You want it to appreciate and you want it to show strong results. Now, on the other hand, let's say you've been doing some research and you think the stock is not going to go up and it will not appreciate. In fact, you think it will go down. So what do? If you think the price will decrease, you can get into a short trade. But before I cover that, let's take a look at this chart. This is the chart of an Apple stock. This is a bullish stock. It's growing stock. Many of you have Apple computers, iPhone, and iPads. Imagine you bought shares of this company. If you would have bought here in January at $450 per share and sold it here in August, 8 months later, at $650 per share, on 100 shares, you would have made $20,000 in profit. So, but if you think the company will go down, you can get into a short trade. A short trade is also very easy to understand. It's a little bit trickier. It's when you sell high and you buy back lower. For example, you sell something at $85 per share and you buy it later at $50 per share. Thus, you also make profit and you're considered to be bearish on a stock. Wall Street will call you bearish when you think the stock will depreciate in value, when you think it will go down and it will not increase much. So the terms bulls and bears come from the way animals interact with each other and they defeat their opponent. Bulls have their horns up in the air and bears, they slam their paws down. So there are bulls and bears, but there are also pigs. Pigs are investors who are very greedy. There is a famous Wall Street saying, bulls make money, bears make money, and pigs, they just get slaughtered. So pigs, they have no idea what they're doing. They get into an investment without doing much research. And all they think is they hope their investment will double, and it never does. So at the end, they lose money. I hope you don't become an investor like a pig. And so I talked about bulls, bears, and pigs, but before you go and invest your money, I would also like to cover the final point, how to avoid a Ponzi scheme. A Ponzi scheme is very easy to identify. Let's say you're doing some research on the website and you're thinking, okay, what company should I invest in? and you come across newsletters that promise you 30 or 50% of returns. So when you see something like this, just be alert. Always remember your mother's old saying, if it sounds too good to be true, it probably is. Always ask yourself, what's the catch here? Why are they offering me 30 or 40% annually if the banks are only paying 0.01? So do your research. Also, don't feel pressured. There are a lot of brokers and salespeople trying to tell you, if you don't buy it right now, right this very moment, you will never get this chance again. So this may not be true. You're better off to just wait and hold off and bypass this opportunity. So be smart and be cautious, and don't be like these investors over here who've been promised 20% return annually. This is all just a Ponzi scheme, and it's not true. So today, this has been just a tiny overview of what a long trade is, what a short trade is, and how to avoid the most common Ponzi schemes. Always remember, Warren Buffett used to say that someone is sitting in the shade today because someone planted a tree a long time ago. I hope you guys start planting your financial tree today. Thank you.